All right, it's time to announce my newest position on this channel. I want to be very transparent. I will be doing a full portfolio reveal towards the end of January. But every time I make a new position, every time I buy a new stock, it's usually for the long term because that's the type of investor I'm becoming. And I'm going to make a video explaining my thoughts and sort of say why I'm doing this. I have started a position in Meta platforms. I'm going to call it Facebook. I'm going to always call it Facebook. And I have a couple of reasons for this. Now, this took a little bit of decision making. It took some conviction for me to do. I've been waiting to pull the trigger on this for a while. I finally decided to do it primarily because the market and most of tech is getting slashed. So I'm like, if I don't do it now, I'm probably never going to do it. Could Facebook still go lower? Yes. But like at this point, I had to initiate my position and just start. And I ultimately want this position to become a $10,000 position. Right now, I'm about $2,000 in. I think by the end of January, that'll probably be around $5,000. And we'll see if we can get it to 10,000 within the next couple months. I am bullish on Facebook stock. And today we're going to talk about why. Now, there's two reasons I ultimately came to this conclusion. One is from the technicals. Facebook is screaming that it's undervalued. We're going to get into some deep numbers today to actually help you understand why Facebook is ridiculously undervalued in comparison to the likes of Google or Microsoft, just from PE ratios and how it's trading from free cash flows. It's ridiculous how undervalued it is. And that's primarily because it has an ESG concern. It has like the whole whistleblower stuff. So like people are still kind of iffy about it. And number two is my own personal reasons for why I was finally like, I want to own a big cap tech stock. So big cap means like we're talking about hundreds of $billion of market cap, not like tiny billions of market cap. Those are more small and mid cap. And I had to pick really between Google and Facebook. And I still might buy Google in the future. I'm not opposed to buying Google, but Google already to me is a $2 trillion company. Facebook's a $1 trillion company. So the upside I see for Facebook getting to 2 trillion might just be a little bit more faster than from Google getting to 3 trillion. And at that point, I think, Google doubling would be 2 trillion to 4 trillion. Facebook doubling would be where it's at right now to 1 trillion to 2 trillion. And I think that's a little bit more possible, right? If Google was to 4 trillion, it's, more bigger than Apple, right? So I ultimately saw Facebook as my bigger conviction play for a large cap. So first, let's get the boring stuff out of the way. Let's talk about the numbers, and then we're going to get deeper into the higher point of conviction I have for Facebook. So Facebook is trading at 20 times price to free cash flow with 80% gross margins and 40% free cash flow margins. That doesn't happen for most companies. I mean, most companies are trading way more beyond 20 times that if they have the margins of 80% gross and 40% of their free cash flow actually ends up being profit for the company. I mean, that stuff is phenomenal. They have 20% growth year over year over the next 12 months, which is great. And they just had a $70 billion buyback of their stock, right? So when you're talking about just the pure numbers, Facebook is screaming undervalued because the margins are where it needs to be. It's trading at a relatively conservative price to free cash flow ratio. And it's still being hammered and not growing at the level it should be. Most analysts are saying Facebook should be like a $450 stock, and it's stuck at like $330. Yahoo Finance has Facebook stock being at least 20% undervalued at current levels. They say that our scenario analysis indicates that our base case of $18.25 earnings per share estimate for full year 2033 at a low 20 times price to earnings multiple is enough for a 20% stock upside. So at a base case, if their earnings per share comes out to $18.25 for the full year 2023, that is enough to guarantee another 20% upside from where it's at right now. And they wrote this when Facebook was at $340. They also said that Facebook is now the second cheapest stock in their large cap coverage. eBay is the cheapest and trades at a 30% discount to the NASDAQ versus a 2-year average of an 18% discount. So for the past 2 years, it's been at an 18% discount in relationship to the NASDAQ. Now it's at a 30% discount, which is why there is a lot more, at least, or a 20% upside over the next coming years. This is also not even taking into consideration the Metaverse stuff. And I don't want to talk too much about that because, to be honest, I don't care that much about the Metaverse stuff, guys. Like, I think it's exciting. I think it's interesting. Do I really think all of us are going to wear this headset and live inside this virtual reality over the next 10 years? Maybe. But I think for now, this does the job, and it does the job very well. And for the community, the development community to make like Twitter a virtual headset and make, Robinhood a virtual headset and make Instagram a virtual, and like all these apps that we use on a day-to-day basis, for this to be in some headset that we put on, it's going to be a pretty big challenge. I don't see that happening for the next 10 years. Do I think that's going to happen? Yes. Do I think there's going to be elements where companies and organizations are like taking place in the metaverse and people are like talking in the metaverse and they're not just talking through FaceTime? Of course I see that happening. I just don't see that happening as the biggest thing over the next 5 years. And I don't really think that's the reason I'm convinced over Facebook. Now, I'm happy that Facebook's investing in that because that shows that Facebook is innovative. And I do think if Facebook just becomes a site where for memes and blogs and status updates, inevitably it's going to die because that's what happens to tech companies. It was cool in 2005 because your whole virtual identity didn't exist. So all of this content could come in this one place and you could connect with your friends and family, all that stuff. And Facebook obviously did a really good job building out Instagram and WhatsApp and all these other features to make this a cohesive environment. But that's going to eventually die out, right? That's just what happens with all tech companies. Yahoo was pretty big and then Yahoo died out, right? Like, so they have to innovate. I just don't think in the next 5 years, the necessity for the metaverse is why I'm making this investment. I'm making this investment for a different decision. And that decision is ultimately why I have a lot of conviction in the stock. What's my conviction? Ads. It's ads. It's advertising. I've been thinking about the advertising market for a very long time. And if you think of the sort of the biggest technology companies in the world, Facebook and Google, they sell ads at the end of the day. They don't do anything different. They sell ads, right? If Google says they're invested in all this stuff, like at the end of the day, Google sells ads, YouTube sells ads, Facebook sells ads. That's what they do. Now, are there other revenue streams? Sure. But 90% of Google's revenue is when you search something and that little thing pops up and there's a little ad button right there. Or Facebook, when you spend some time and you're scrolling and there's an ad that says sponsored, like that's what makes the majority of their revenues. Now, what really triggered me to pull this decision, right? I think it was a week ago, I was like, you know what? I'm just buying it at this point. I have a friend who started a smoothie business. Okay. Shout out to Ryan. Ryan, I don't know if you're watching this, but I wish you all the best of luck in that smoothie business. And, when a friend starts a business, you want to support that friend and you also want to think about how they're going to execute against it. Because every business at the end of the day is just an execution risk. Like all ideas are fine, but how are you going to actually make this smoothie business a really big business? And the first thing he started to do, he has been thinking about this for a while, but he finally publicly announced it. And I know how that feels to like publicly announce that you're doing something and dealing with the world and their criticism and all that stuff. And it's a big step for someone, right? And especially if they're mature enough to actually feel they have the confidence to be able to do it. So he did it. And he starts this smoothie business. And the first way he is able to at least get a couple of people to care, right? Because when you start a business, you got to get people to care. And most people don't care about anything. So how do you get people to care? He starts posting on Facebook. He starts making Instagram reels. He starts showing the process of him building out this smoothie business and literally building the smoothies and like being this operator of this entire new business. For every Ryan that's starting a smoothie business, there are thousands of other people starting businesses, brands, podcasts, YouTube channels, e-commerce stores. There are so many people in the world that want to start something, that want to do something, especially in the technological age that we're in right now, in the great resignation age that we're in right now. People feel as if they have an opportunity to build an audience online and then sell something to them, right? That's kind of like this new goal that you don't have to work a 9 to 5. You can create content online, which is a difficult thing to do. It's not easy. And you can actually sustain a group of people's attention, provide value to them, and then hopefully monetize off the back end. The only way you do that is if you get their attention. This is why I kind of think decentralized social media doesn't make any sense, because the whole nature of decentralizing something is that people aren't in one place. And the only way you get people in one place is if you centralize, if a platform comes together that has algorithms and has recommendations that are powered through really good algorithms to get people to all come in one place and stay in that one place. It's a very difficult thing to do. Facebook and Instagram have done a phenomenal job of doing that. So when I think about Ryan, I think about all the other people that like want to start something and need at least some baseline of attention, right? Like even your family and friends that you haven't talked to in a while, you need to get them to support and like the page and follow. Like you need to get some people to care. And the only way you're going to get those people to care is to go where they're at. You're not going to go pass a flyer around. You're not going to go around Walmart and ask people to like check out your smoothie business. You need to get the world's attention for your smoothie business to make any sense. And in order to do that, where else are you going to go? And that's sort of my bull thesis here. They say investing in products that you know is the best type of investing. And with Palantir, it's very hard, right? Because we haven't used Palantir. Foundry is this like B2B software that no one's really gotten their hands on. So we have to do all this due diligence and try to understand Palantir. And hopefully, we've done a good job of it as a community. But it's harder to invest in, harder to feel super big conviction because we don't know what it does. It's easier to invest in Google. I know what Google does. I search things on Google, I get results. That's the same way I'm thinking about Facebook. Like it's easier for me to relate to more and more people that want to buy Facebook or that want to use Facebook, which means Facebook will grow their revenues because more and more people are using it. So they have more ads to sell. Because I think from a creative perspective and from a person who wants to start businesses and be an entrepreneur, it's like, where else are you going to go to get that attention? You're going to go to the platforms that actually have the ability to give you attention. And I know that, right? I can wrap my head around that. So I'm comfortable making that investment decision. If I'm wrong and long-term Facebook doesn't work out in the next 5 years, it's like, all right, I can't blame myself. I can't say like, oh, man, that was a stupid decision. You should have definitely never invested in Facebook. You should have seen that coming. It's like, first of all, the numbers were screaming undervalued, especially as the stock market's crashing in 2022. Number two, it's like I thought that this was going to be the place where everyone goes to get attention, and I didn't see, and that's already happening, right? They have like 3 billion monthly active users. I don't see that going away. The only way I'm wrong on this trade is if that declines. And I don't see it declining. It's really hard to gain attention on platforms. I mean, I'll even tell you as a YouTuber, I've seen some pretty good growth on this channel so far, and I'm very, very grateful. I think you guys see through some of the comments when, when people, give any type of compliment in the comments. I mean, I'm just so grateful that people are taking the time to watch this stuff, because I know it's hard for people to sustain your attention. Like, I know it's hard for people to discover something and like actually care about that person. So that's why I put in a lot of effort and work, and I really try to engage with the community, because I'm so damn grateful that people actually care enough to watch these videos. It is a very difficult thing to do, and YouTube in particular is one of those platforms that has 500 videos uploaded per minute. Like, it's difficult to build an audience on YouTube. If you're able to do it, it's awesome, but it's difficult to do it. And then you've got Instagram, right? And I think the combination of Facebook and Instagram together is what creates this possibility for more and more creatives to build an audience. Even if Facebook and Instagram aren't the easiest places to grow, they're still the places that have the most amount of people. And once you develop a bit of a brand authority on Facebook and Instagram, it's very important, because most people are going to check out your Facebook and Instagram before they check out your TikTok. TikTok is still a content platform in which I go there and I get content, right? It's kind of the same thing as YouTube. Whereas Facebook and Instagram are still kind of like my virtual identity. Like, if your business is not on Facebook and Instagram and having like a nice feed displaying what they do, you immediately lose trust with consumers. It's just kind of inevitable. That's just kind of how we think of Facebook and Instagram. It's like a virtual resume for everyone, anything, and every brand. So those platforms aren't going away. So if those platforms aren't going away and more people like Ryan are going to need to be able to develop attention, then they're going to go to Facebook and Instagram. Now, where does this monetize? As Ryan, right, hypothetically starts seeing more people follow his Instagram account and he starts seeing those convert into smoothie sales, he's going to think about running some ads, because if I'm already getting these many followers checking out my smoothies, why don't I create more ads that get more people to check out my smoothies, right? It's this nature of figuring out how you get more attention all in one place. And that advertising system to me is also the most advanced. I mean, TikTok has ads and that's great, but TikTok ads are not compared to like Facebook ads. Like, Facebook ads are legit. And I know the difference between Facebook and TikTok ads because I've used both of them. And it's like Facebook, it gives you a little bit more data because it just has better targeting methods right now versus TikTok, because TikTok, again, is more of a content play. Facebook just has a lot more algorithmic recommendations with like lookalike audiences. And they have all this stuff that helps you better get a return on your money when it comes to ads. So my bet on Facebook isn't even the metaverse, isn't even the Instagram Reel ads that we didn't talk about, isn't the live shopping features that they're integrating. It's really this bet that I think in the next 5 years, at the stock price at $330 right now, I think it's very reasonable it gets to 600, especially if they keep growing. Now, they're not going to be growing as fast as they were growing before, but these guys are doing $30 billion in revenue a quarter. I mean, compare that to Twitter. That's like Twitter's like barely doing a couple billion per year, and Facebook's doing $30 billion a quarter. That's why Facebook is at like a $900 billion market cap and Twitter's at like a $40 billion market cap. I mean, like, it's astonishing the difference in those social platforms. And additionally, every business, again, in the future, in the next 5 years, like, if you want to get some brand recognition or you want to build on top of your brand recognition, you're not going to leave Facebook out of your advertising strategy, right? That you're not just going to use Google pay-per-click ads. You're not going to use Amazon ads only. You're not going to use TikTok ads only, because again, TikTok is very swipe content type of thing. It's not like I'm scrolling and I see a picture of something with a call to action. Like, that's not what TikTok is. The only place where you get that in one place is Facebook. And I don't see that going away anywhere. The only issues are these ESG concerns, their whole idea of like they're targeting little girls to use Instagram and all this stuff. I think a lot of it is overblown. I think some of this stuff has some merit on it. The whistleblower stuff, some of this stuff has merit. But at the end of the day, no one cares. I think at the end of the day, Facebook provides us a valuable service. Could they make their algorithms a little bit more friendlier? Yes. But ultimately, they're going to be able to build out more products and services on top of the things that they have to keep you using Facebook, because you're going to get some value from Facebook, and that value will transcend into more and more advertising dollars as more and more people get online. You got to remember, there's still 2-3 billion people that aren't online yet. When all those people come online, they're going to want to express themselves. They're going to want to make videos. They're going to want to show the world the unique things they have. They're going to want to, show what they ate for breakfast that day. All of those people that haven't been able to do that are getting connected to the modern infrastructure via the internet. A lot of that happening because of Starlink. And when that happens, they're going to want to use these platforms just like we have been using these platforms over the past 5, 7, 8 years. So at that point, that's why I'm like really long these tech platforms. They're not going anywhere. They're just going to get more users. And the ones that are the best, i.e. Facebook, are really going to benefit from that. And I think those people are also going to want to start businesses. And when they see how easy it is to target customers in their specific location on their specific interest to get revenue for their business, that ad money is going to go to Facebook. So I'm long Facebook because of the ads. Very simple investing thesis. This is one of my more simpler convictions in my portfolio. And I want to get this to a $10,000 position over the next couple months. So let me know your guys' thoughts. Are you invested in Facebook? Are you long Facebook? Do you hate Facebook? Looking forward to reading comments. My name is Mitt. I'll see you in the next one.